Greetings, Dr. Jeffrey Scott, and this is my market MRI Pro update for Wednesday evening, October 8th, 2025. Well, we got those Fed minutes, and absolutely no surprise because every Fed has been telling us what's coming. They may be divided, but they more of them want two more cuts than one. So, more rate cuts coming, more new highs in the markets, stocks and gold, and more. Again, my name is Jeffrey Scott, marketmripro@gmail.com. Google Group is Top Down Trader. www.marketmripro.com. Disclaimer, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. Intent to the video, to show you how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And as most people know, I've got tools in multiple platforms. My Google group's called Top Down Trader. It's a great way to stay in touch. You'll find out when I post videos, and you'll get some opportunities that I don't share on YouTube. Once I get through my October meeting, I probably will cut back the exposure on YouTube and concentrate more on um, either the Google group or we'll officially launch the Discord site where we can do things intraday when I do something intraday. Palm Beach Gardens meeting is October 26th and 27th. It's frustrating. I'd expect it to have more attendees, but I guess it's just a sign of the times. I'm looking forward to it. We'll probably have, you know, 8 people in the room, then a bunch of people on the internet. The more the merrier. I can take up to 12 on the boat. So if you're on the fence, there's not that many more seats in the room. And I'd love to have the room full. Um, it's a great opportunity to all of us to learn from each other. So it's 12:50, breakfast, lunch, and dinner on Sunday, breakfast and lunch on Monday, dinner cruise on Sunday night with as long as weather permits. 2 packed days of education, software instruction, $400 rebate to anybody that attends. So the 1250, you'll have 400 to use towards my tools, and you'll also have $400 to use towards the meeting next year if you already have the tools. John Person, one of my good friends, has a meeting parallel with mine. He's a great, great teacher, nice guy, brilliant trader, author, inventor of indicators. And his is his Friday and Saturday, and mine is Sunday and Monday. So we back to back intentionally. And if you're interested, reach out to me and I'll send you a link. Know your news and earnings. So tomorrow we don't get the initial jobless claims. So we don't have to worry about that. I mean, it's actually kind of interesting now. The Fed cutting, most participants are bullish about that, and we don't have the news to change their mind. Um, we may get some wholesale inventories, and on Friday we'll get perhaps some consumer sentiment, which could surprise to the downside, which would be bad for the markets. We also start tomorrow morning Delta earnings, so the earnings season is beginning. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings date is scheduled. As you can see by all the little arrows on the red column, those are all different Fed heads that are speaking. So I don't think we have a whole lot of risk there. I think we know what they're going to say. 1 or 2 cuts this year, still a risk to inflation, but they're concerned about the economy. And I get it. Those of you who have not lived through a recession, or more importantly, a bear market and a recession, will see the difference when we finally get there between having a 20% correction and a 50% correction. They do occur, but those bad ones do occur in usually a bear market, not in a recession, not in a more secular, strong economy where we get pullbacks all the time. For more information about the software, anything that I do, reach out to me at marketmripro@gmail.com. If you have own the software and have any issues with installation or any conflicts, Praveen at coding@marketmripro.com. One word about the software, we're upgrading servers again. The more people we get, the more we're going to have to upgrade to keep the speed going and add some memory. So if you've seen any slowdowns, and it's kind of depends on how many think people are accessing it. We've got multiple locations where we have servers, but we're going to upgrade them tonight so that we stay ahead of any potential slowdown. So let's take a look at the charts. We'll start here. You could see the only thing down in the ETFs was volatility, so that's good for the market. But you can see the diamonds were flat. Dollar was up a little bit. Spider was up zero point 0.6. The Russell was up 1.05, reversing yesterday's losses. The Qs were up 1.15, and Bitcoin was up 1.35. Notice that the Qs, Spiders, and Russell finished at the top of their daily range. And I did notice a little pop in my portfolio. If you look at new high, new lows, they're still standing high on the new lows compared to the weekend, but we're still very positive on both. If we look at S&P 500 sectors, the only things that were positive were materials, discretionary, and healthcare. Healthcare has been really performing well and the leader over the last 20 days, and not quite the leader over the last 50 days. You can see the weakest was energy and real estate today, but only three S&P sectors were up. What themes were working? Back to where we've been: silver, copper, metals, biotech, blockchain, cybersecurity, gold miners, semis, cybersecurity, Internet of Things, artificial intelligence, cloud. It's kind of narrow. It's definitely growth stock driven. All seem to be doing with AI, which is uranium. It's probably the solar. It's going to be energy producers, although utilities today were, where are those utilities? Ah, there's utilities. So it's tech industrial utilities. Ha ha ha. Sorry about that. So the big leader was technology followed by industrials. That makes more sense. And there's your utilities. So yeah, there was more than three things up. So utilities are strong because electrical generation for data centers. Data center construction is is strong. Uranium and anything that creates alternative power, even natural gas and coal, have been strong. Companies that make wire and electrical connections, think Amphenol, have been strong. It's been how many different ways can you play AI besides buying NVIDIA and AMD, which were both strong? Um, One good thing today that was very different over the last several days is participation was better. You could see sectors today versus yesterday in the S&P 1500, today versus yesterday industries, and the same thing in the Nasdaq and the NYSE. Much more breadth. 60% of the stocks were up in the S&P 1500, 60% in the Nasdaq, and 59 in the NYSE. That's a strong day, and hopefully your portfolios showed that. Whenever I start loading up with contras, I'm happy on down days, and I'm less happy, but still happy on up days. And I've learned how to position size it so that even on an up day, I can still be positive. It was another good day, and it means that the next down day, it probably won't be as much protected because my options moved a little bit out of the money today. But I do like having a little insurance here. And nothing makes me more upset than if I have options that expire next week for the markets to tank between now and then. So I put some puts on some positions. I sold some a little bit early. Now, what's the downside of selling options early? If you have a single option, there's no downside. Um, because if you think about the price of an option, it's going to be the in the money piece and then the time value. And the closer you get to expiration, that time value drops precipitously. So if your long call in a spread is deep in the money, it's pretty much priced at what the difference is between the price and the strike price, maybe with a few pennies more. But if you've shorted a call at the same time, that's at the money or out of the money, it may have time value still $2 or $3. So if you sell now, you're going to be paying extra on the time on the out of the money call. So I look at different things that I can do, including puts. I look at different strategies. I like to maximize what I get, but you really never do. So I took some profits. I bought some puts on a couple of my positions. And we could also talk about another thing that season that we're in, and it seems to be secondary season. If you want to see a stock get hurt, then all you got to think about is what happens when they make more. So I never remember what the ticker is. There's I have one of the qubits. Yep. So I own D-Wave, and you could see D-Wave did not have a great day today. And no, it wasn't because it's got negative seasonality. The reason it didn't have a great day, it's because, well, one, we had some news come out from Barron saying they're overvalued. And I think, and now I have to worry, are they going to look at their company and do you issue stock up here? So this was a news related, run too far overvalued. And then another one that I own, IREN, this is what happens when you announce a secondary. So they created more shares. Now, do I blame them? Absolutely not. If your price was 20 bucks in August, think about how less dilutional in your company to issue shares at $98. Excuse me, 59, not 98. I'm looking at relative strength at $59 versus at 20 bucks. So a lot of these companies that have had big runs, it wouldn't surprise me to see them start doing secondaries. And I think Rigetti, not Rigetti, one of the one of the aviation things was it Archer? Let's see. Yeah, this guy, I think Archer did in the last couple of days, also did a secondary. So secondaries happen. They're usually brutal in biotechs. They love to do them after they get positive data. Just part of a strong market. Actually, it's probably a good thing. And I've seen plenty of strong stocks just go higher after the secondary. If we look at the timing model, you can see the daily, all the bongos are blue again. The line down here is green. We're still fairly decent amount of room above the WMA, still all showing B long. If we look at the weekly, notice how I think this is the new server. It's sped up quite a bit. The weeklies all-time highs on Spider today, all-time highs on Qs today. Russell, we'll have to look at the daily chart and then not all-time highs on the diamonds. Let's go back to the daily chart out of curiosity. Yeah, we hit the all-time high earlier in the week on the Russell. So great day in the market um, for most stocks, but not all stocks. If we look at the US indexes, let's look at them closely again tonight, each one. Let's pull up the spider. Beautiful run off the bottom. Seasonality is our friend. You had a nice up candle closing at the high of the session, pretty much reversing the negativity from yesterday. Um, Interestingly, you saw some of our dots, which we don't see a lot on indices. So we had a breakout and a CPR. And what could go wrong? Well, what could go wrong is the market's getting extended. High jumps 95. But I've still thought the 17 and the 50 are likely places this market goes to. So no different than yesterday, still looks good. Just a white candle because it was up, not a red candle. Same story on the Qs, good seasonality, all-time high set, all-time closing high, closed right off the highs, which we mentioned. High-low jump is 97. These things are getting extended. And what is the high-low jump measuring? It's measuring the extension from the 50 here, the 200 here, and the 17. And when stocks reach a level above 95, it says they're extended to the 95th percentile the last year. And what the reason why they don't get much further than that is because they revert to the mean. So we have reason to expect at some point a bit of a pullback. Take a look at the diamonds. Still beautiful. Here's a little pullback there, nowhere close to the 17. Seasonality certainly improving. And this high-low jump is going to be a little bit lower. That's 72, so not really pressured. If we look at the Russell, and the Russell did join the all-time high parties not long ago, right here. How exciting is that? A little bit of a flag here, not quite to the 17. Don't know if it's going to get there. Currently, high jump at 80, not an issue. So all of those markets, all things considered, I think they look really good. But we're getting long in the tooth, and one would expect at some point it would not be abnormal, unusual, surprising, or bad to see a pullback. And when that pullback comes, it's not going to be just stocks, it's probably going to be gold and silver as well. Now, one of the things that's bothered me about volatility is that it's sort of making a little bit of a saucer bottoming pattern, and it's still relatively high, although the VIX futures were down significantly 5 points today. What's on that dashboard is an ETF. That's the VIX futures here. And then the dollar, well, here it looks like the dollar's high, but you got to know the context. Yes, it's breaking out. And yes, I'll be curious if we can break above the 200. But in reality, the dollar's still way down. So a little strength is good because I'm going to Europe next week, and that means it'll reduce how much things cost. But we'll see if it can break the 200. I have my doubts. If we go over and we look at some of the commodity ETFs, gold remains on fire, another big gap up at 1.64% move. Silver um, also higher today. All right. Sometimes I just gotta stop playing with that wheel. So silver, you can see here, maybe a little bit of a shooting, don't do, little bit of a shooting star, but still up almost 3%. Oil is just dancing around above and below the 200 and below the 50. Natural gas pulling back to the 50. And then after yesterday's decline in rates, the 10-year was up a bit today. Let's see. 10-year was up 0.24. The 30-year was relatively flat, up 0.05. I just want to see it stay below 5, and it's doing that. If we look at the buckets, we came off the lows, stocks below, moved to the right, and nothing here is particularly worrisome, so neutral. If I look at market breadth, I don't think I have the NYSE volume yet, but it doesn't look. I'm going to have to ask Praveen, did we get yesterday's? Yeah, we got yesterday's. Um, you can see the NYSE is a little flag pattern just off its all-time highs. The NASDAQ composite hit all-time highs today. That's good to see. You can see stocks above the moving averages turned up a little bit today. And if we look at new high, new lows, advanced declines, and up down volume, they're all green on both of them. And on the NASDAQ, we had another bango, which is an exuberant buying. Yeah, this is exuberance here. This market is extended. Everybody's all in on the AI trade. But does anything look that nefarious here except for the extension? No. Extended markets can get much more extended. However, pullbacks happen and should be expected. Again, as we look at the extended market breadth tool, 0.70, 0.66, 0.56, and 0.49. None of the indices have moved up quickly enough to say that the markets are going to come down. So that's neutral. You can see the spider is doing much better from a divergence perspective, but still all-time high, not all-time high in AD lines nor RSI. And when the RSIs are up at this level, they're getting to a point that markets often reverse. Big time divergences still on the NASDAQ composite and the Russell, especially when you look at the AD line. And if we go back to the ratio charts just to see what's working, you could see that healthcare is getting a little bit of consolidation here, still strong. Tech really turned it on today, big time. Other than that, utilities, which I think is really much um, electricity generation to supply data centers. So if you ask me what I think about the market, look, this market's going to correct sometime. Yes, it could be tomorrow, and it might not be tomorrow. It might not be next week. It might not be until February or March. Maybe we get a recession next year, but we're going to correct. Right now, it looks like we're going higher. And frankly, I don't think it would be bad for the markets to consolidate and go sideways for a week or two and then build up some energy and then move on to higher highs. But right now, it looks like the market just likes to go one way, and that never persists forever. If we look at the JAS layout, let's just go. We have 39.29, so a lot of stocks today. Let's go the top down, and let's rank them by performance. And let's take industrials, tech, basic materials. I'm going to take healthcare because its 2-day momentum is greater than basic materials. These become the top industry groups. Let's rank them by performance. And let's take the top 10. It's interesting, those truckers are up at the top. I noticed a bunch of truckers over the weekend were setting up. All right, we've got 462 stocks here. There's no way I'm going to look at all of them. So the first thing I'll do is cut the price over 5, and you got to have volume over 500,000, and that'll cut us down to 254. Now, there's a couple of different sorts. Let me talk about them. Maybe you want to look at the ones that had the big volume. So look at relative volume sorts. These are stocks that are moving a lot. Poet is one that I've been in the past, and it really had a big move today. We'll get it to pop up in a second. There you go. And you could see a massive move. So I would wonder why. It's clearly getting extended, and I'd be careful chasing it. But let's see. 11.13 are earnings, and they're expected to be a loss. Revenue is maybe ticking up, but not a lot of revenue. Let's look at news. Well, I mean, I'm sure it's that two-letter word, and it's not in. Raising money for connectivity in the AI space, the way this market is, that's probably enough to cause somebody to go crazy. But it's a small stock early in its development. Let's look at the weekly. On the weekly, you could actually argue that it's in a nice trend. Massive volume. Um, yeah, it just ran so fast so far. I expect it to consolidate, but it doesn't have to. Penguin Solutions. I wonder if they had a secondary here. Notice massive volume, but massive down day. Let's see what the mass says. Earnings, soft outlook. Well, that's not a good thing. That's a bad thing. And you have to look at this. Look how good the stock was looking. It gapped up 2 days ago, then reversed on Tuesday and considerably down Wednesday. So you could look at relative volume. I like that during the day. You could look at percent move. I always like that one. What are the big leaders? There's Poet, Flux, um, of course, Power Holdings, whatever it does. VSAT satellites, they've been hot. That's a nice little breakout here. Um, I've been looking at this for a couple of days. That's interesting. It had a CPR, volume breakout momentum. Look at that RS move. And you're white above the yellow for the OBV. That's an interesting looking one, breaking out of a base. It probably doesn't make much money, and it probably it doesn't have much in the way of earnings. In August, they had a massive surprise. All right, I like the chart. Another way I like to look at sorting is to look at momentum. And this is short, intermediate, and a longer intermediate. And if I look at short-term momentum, I get top build. You don't think a building company may be involved in building out data centers? Big gap up in a move, gap volume, breakout momentum, relative strength looks great. OBV is turning up, not overly extended. Cleared the 50. If I open up here, fundamentals, I just love having at my fingertips all the things that I would normally want to look at. Great earnings, not a lot of growth. Revenue is kind of flat. No dividend multiple of 20. I'd have to do research. I don't love the fundamentals. Let's look at the story. M&A call. Oh, so they bought another roofing firm. Well, that might be a good thing. All right, it's worth studying and looking at. Um, AMD still up on the OpenAI investments. Monolithic Power, we looked at this over the weekend. Beautiful breakout. Impinji, pull back to the 50 breaking out. CrowdStrike, a cybersecurity leader, did very well from recovering from when we all woke up and our systems were broken because they did a software update. I believe it was them that didn't work, but we still use them because they have a great product. I like this breakout here. It's not overly extended. It's at 67. It's got good volume, a CPR, breakout and momentum, relative strength and OBV look good. When are earnings? Earnings are not till Thanksgiving. So that's another way of looking, sorting it by momentum. And then the last thing I like to do, and I appreciate the user that asked me the question, is I like to sort them by U or D. And now I know why he said U. When I look at this in the layout view, it says up, but in the top-down view, it says U. Same thing, up. I've been doing this for a long time. I don't have time. I like on Friday nights to look at 1,000 charts. I don't have time for that during the week. I do these videos, as I said the other day, I just do them live. I don't prep for them. I don't have a list of stocks that I'm following. I just do the same thing every day, and that's been maybe that's my super strength is that I'm got a process that I follow and I stick to it. Um, if I do pullbacks and uptrends, leading group stocks, leading industries, leading sectors, and then I rank them by the ups. Well, I found out, well, I don't have to look at 300 stocks that are going nowhere. Show me the ones that have movement. Show me the ones that have gap, have volume, breakouts, momentum. ZS has been a leader. Ooh, like nice little cup, handle, and a breakout. Not much of a handle, but look at that. CPR, volume, breakout, momentum, relative strength, OBV look good. When's earnings? Earnings are not to December. Revenue story here, and one of the things that came out of the San Francisco meetup is that it seems that stocks are being driven as much by revenue than they are by earnings these days. VS looks great. We already looked at VSAT breaking out from a base. ESTG, we need storage in data centers. Just look at Seagate. This one I look at getting extended. It's 987. Well, you can still buy that. On semiconductor, this one's been going down. I have plenty of stocks in uptrends. Maybe it's reversing here. Internet of Things, Samsara, contract manufacturer. So I go through this list this way as well. So lots of different ways to skin a cat. And then the other thing you could do is, and we're going to talk about my trading systems on the next layout, but you could go and just look for A plus stocks. That's a very tight screen. Let's look for A stocks, see if any of them make the screen. And so these are stocks that are going to look like this. They're going to have a squeeze. They're going to have a breakout. They're going to have relative strength and OBV above 1. And I'm going to look to see if any of them give me a nice pattern. This is sort of a cup and a handle, and a cup and a handle and a breakout. Arista Networks is just a great stock over the years. NVT, basing here, just started a squeeze. MDB, a software company. Flextronics, one of the contract sales manufacturer, coming out of a squeeze with a breakout with good relative strength and OBV. Celestica, another contract manufacturer, had a big run, pulled back, looks like it's ready to go again. Samina, contract manufacturer. HP Enterprises, ooh, GigaCloud Technology. This is obviously a cloud play, and this is one that has been a dog for a while, and it looks like it's coming back. So it's coming up the right hand of the cup, and then it's pulled back to the 50. It had a person buy. That one looks like it's getting ready as well. FFIV, another, I believe, software play, pulled back to the 50 and starting to move again. You got your squeeze, you got the momentum. DocuSign, or excuse me, Doximity. Facebook for doctors, I don't get it, but it must be doing okay because it's running again. And then SAIA, which is an industrial play. I don't know what they do. I like to see it above the 200. So again, different tools to bring up different types of stocks. Now let's kill my filters. Let's turn off the different industries and let's turn off the sectors. And let's go into the impulse layout. So here's that 3,900 stocks, and this is for the bottoms up lovers in the audience. So I had thought to make your life easy, I'll just do two. A plus, these are going to require, takes a second to run. The only stock that cleared the A plus is DC. What does this require? This requires a price and volume. It requires a double momentum signal, the two dots there. It does not require the squeeze, the PSAI reversal. It does require the relative strength breaking out and the OBV. Don't know anything about it. It's a super cheap stock. I'd have to. It's got plenty of volume, but kind of like the look. It's a probably. It's a not probably. It's a low priced gold stock breaking out of a flag, little flag. So I might look at this now. If I look at it just for the 2-day Momo with $3 and $5 filters on, let's just do that, and then put a minimum, got to be above the 200. We get a couple more. We get FIG. FIG is an IPO, and this one, there's your double momentum. It had, I think with OpenAI that it's put ChatGPT in. That's interesting. I don't know. FIG R is another IPO. Kroger's. Boring Kroger's. Well, if the markets have trouble, we still got to eat. Kroger's has been in an Albertson takeout story, so earnings are relatively stable of late. $1.04 is going to be compared against 98 cents, so it's a little bit of growth. 3.4 billion will be compared against 3.3. Not, kind of flat there on the revenue, but it pays a 2% dividend. And like I said, it's going through a takeover of Albertsons. GoodRx teaming up with Kroger. Three stocks using buybacks to drive sustainable price growth. Well, you take the earnings, you divide it by the number of shares. If you reduce the number of shares, your net earnings are higher. Um, Same thing with revenue. And buybacks are great and they can boost share price. So Kroger might be up because of a buying back shares, or maybe the market's starting to see it as an opportunity. Now it's got over here the 50. I'd want it to clear the 50 if I was to look at double momentum. Not that exciting down here yet. That's why it didn't fit the A plus screen. And then Netflix. So the thing about Netflix, and I don't talk about seasonality on these videos, and I'm really not going to do that today, but you can look at Netflix and Netflix seasonality, and it's not hard for you to run your BDIs over here, or my BDIs, yours may not be BD, and that's looking at 5, 10, and 15-year seasonality. And clearly we are going into the strong season or one of the strong seasons. So looking here at various dates, and so for example, if you bought it on the 16th, and we look here is what's got the highest hit? Well, I just messed up. Sorry about that. We wanted Netflix. The point is, I like to look for stocks with greater than an 80% chance of being up with seasonality, and I want at least a 10% move. And this type of this system here can help you find the dates where that's likely to happen. And if we just look at where we are here, you can see we're getting to some very ripe times where you have um, big returns, and then we can look at what the dates are where those returns came from. And but all I have to do is look here and see come the end of October, middle of October, Netflix is strong. All right, let's go back to the JES layout. We looked at the A pluses. Let's look at the A's. Lots of these. And again, these are my old time favorites. Stocks in an uptrend, Mobo breakout from a squeeze, or momentum from a squeeze. And the scan requires relative strength to be breaking out and OBV. So you'll notice that OBV is positive on every one. The daily relative strength is positive on every one, and the weekly relative strength is positive on every one. When I say relative strength, I am looking at relative strength versus the spider compared to its moving average. And as one of the HGSIers, Chris Wilson, used to show me, when that weekly breaks above the moving average is when the stock starts to go higher. So let's just look quickly. Alignment Healthcare, I think they're back. This is not the company that does the teeth. And if we look at it, you got a mobile breakout, momentum, and a breakout from a squeeze with relative strength and OBV moving up. AMSC, American Semiconductor, this is actually involved in the solar industry. It's got a nice little flag set up here and maybe getting ready to break out above that. And again, you're going to see here's a breakout momentum. No squeeze right now, but it's pulling back. Arista Networks, we've already looked at this. This might be one of the prettiest charts of the night. Um, ASAN, Asana Technology, below the 200. I don't like that as much. Don't know Aristia Therapeutics, but a nice uptrend here, breaking out. Worth Research, AVAH. I mean, there's something going on when each of the contract manufacturers, what it means is these semiconductor companies are needing help to get produce more. Celestica, obviously a big run, looks like it might be getting ready. We looked at Dakota Gold, cheap stock breaking out. We looked at Doximity already. Um, Edu, I'm not really good at buying these education stocks. I seem to buy them before the Chinese come out and change the rules. So I probably won't be playing it, but this thing gapped up and it looks like it's ready to go higher. ETN is a electronics company, um, electrical company. What does that mean? Data centers. EYPT is a healthcare stock, obviously an ophthalmology space. I don't know it. FFIV, we looked at this one here breaking out. Flextronics, contract manufacturer, big run like Celestica, moving, breaking out. Again, this is another one that I like a lot. GigaCloud Technology. Do they make money? Huh. 70 cents is going to go against 98. That's not my favorite. And 30 versus 31. But it's a recovery play because it dropped and now it's starting to go higher. And it'll be that surprise that matters. Look at the surprise last time. So GCT looks interesting. Earnings not to November 6th. I like getting buy signals sitting on the 50. We looked at HPE already. Keros, I don't know. MDB. I'm just looking for something that I like better than what I've shown you. Electrical company, data centers, big run, pausing to refresh. Ecor, I don't remember what they do, but there's your mobile breakout from a squeeze. And those that have been to my education programs in the past, what are my favorite setups? Mobile pullbacks and uptrends with a mobile breakout from a squeeze. This one's a little dirty. I don't mean dirty in either way, except the chart's not tight. SAIA again made this filter as well. Um, I just would rather have it above the 200. Contract manufacturer in Sanoma. I wonder what did they do to drop their price? How do you like this? September 11th, it's a strong value stock. September 24th, it's a top momentum stock. October 6th, something about tariffs. Obviously, the market didn't like it as it sold off, recovered a little bit today. Somni Group International, I don't know this from Adam. SKE, SQM, SYRE. Poking its head above the 200. You got volume breakout momentum coming out of a squeeze. Relative strength is perking up. Twillo, this thing had been doing well, broke down, but breaking above the 200. This one was volumes were too low, the options, or else I would have bought this back here. XPO, trucking logistics. We've looked at it here. It might be time to look at it again. Breaking out again, and then ZBio. Now, I'm not doing this video and telling you which stock to buy. Come to my live meeting, I'll tell you. I'm just kidding. I'm still not going to tell you. Ian used to tell us he's not a guru. He wants to teach us to become our own gurus. And now I know what he meant. We're just human. We can identify nice looking setups. We can pick which ones to trade, but it's on you. It's not on me. So I'm showing you the tools. I gave you a lot of what I thought was interesting stocks. I really like this one here. Arista Networks. What a beautiful chart. Is it too late? Probably. I'm going to take a look and decide. I've looked at this thing so many times over the years. Hope you have a great day in the market on Thursday. Look, this market, I think it goes higher. I wish we get a pause to refresh. You've got the geniuses, Paul Tudor Jones saying 1999, NASDAQ doubled between this date and the middle of March, and he feels like it's 99 again, and you got to be long. And then you got the other side coming in and saying, frothy, frothy, frothy. These AI valuations are silly and you have to be careful. And you look at some of these valuations, and are they silly? Should you go up because you announce a deal or that you have Chat GPT? Isn't Chat GPT in a lot of places for free? So how do I monetize that? And you look at the fundamentals. We actually got some. Their forward PE is 444.